Hello everyone, welcome to Excellence Forum's ABCD of Accounting, and we are conducting the Income Tax Literacy series. Friends, are you a frequent foreign traveler or residing outside India and not sure if you are liable to pay Indian income tax? This video will definitely help you out. After globalization and growing presence of multinational companies in India, many of us travel abroad a lot and also may be deputed or shifted to another country. And when it comes to calculation and payment of Indian income tax, it becomes a cause of concern as we do not know if at all we are liable to pay any tax in India or not. So today we will discuss one of the provisions on Indian income tax which facilitates the exemption from Indian income tax to a person depending upon his residential status. In the last video, friends, we saw the types of persons prescribed in the Indian Income Tax Act, namely an individual, a HUF, a firm that is an AOP or BOI, a company, and so on. For more details on the definition of a person, please refer to our previous video on the channel. Further, a person can be a resident or a non-resident. Now, we have to understand that the term residential status is as per the Income Tax Act and it has got nothing to do with your nationality or domicile. The residential status of a person depends upon how many days he has physically stayed in India. Hence, an Indian citizen can be a non-resident for income tax purposes, whereas a foreigner who is citizen of another country can be a resident of India for income tax purposes. Now we will quickly see the different types of residential status prescribed in the Act. The residential status are different for individual or HUF and for any other category of person. We will first see the residential status for individual or HUF. They can be a resident or non-resident in India. And further, a resident individual or HUF can be resident and ordinary resident or resident but not ordinary resident. And in case of any other person, they can be either resident or non-resident. So before we actually go into the provisions of how do we determine the residential status, I think we must first understand what is the importance or relevance of understanding this determination provisions. A resident and ordinary resident person has to pay tax on his worldwide income. Now this is important to understand because even if the income is not earned in India and the person is a resident in India, then he has to pay the tax on the entire income earned by him, whether in India or outside India. Of course, there are certain reliefs granted by the double taxation avoidance agreement between India and other countries, but generally he has to pay tax on the worldwide income. Whereas a non-resident or a resident but not ordinary resident person has to pay tax only on the income which has been sourced from India, received in India or earned in India. Now you must be thinking what is the difference in a non-resident or a resident but not ordinary resident then? The resident but not ordinary resident status will mainly benefit for a person who is returning to India after a long stay outside India. This will be more clear when we actually see the provisions. And again, there are certain points that we must understand and remember before we actually see the provisions. The first is it is not necessary that the period of stay must be continuous or active. Neither the stay should be at his usual place of residence, business, or employment. He can stay anywhere in India. It will be counted as a stay in India for deciding the residential status. Then the next point to remember is the number of days stayed in India, both the date of departure from India and the date of arrival in India are considered as the stay in India. The next point is the passport can be an important reference document to actually count the number of days of stay in India. And the another point which is very important to understand that the SAC can enjoy different residential status for different assessment year, which means you can be a non-resident of India for current assessment year, but you can become a resident of India for the next assessment year depending upon the provisions of the Act. Then the next point is a person can be resident in more than one country for tax purposes, but he cannot have two domiciles simultaneously, right? And last and most important is it is the duty of the assessee or the taxpayer to prove his residential status. So friends, in the next video, we will actually see the provisions for residential status of a person, individual HUF and other persons, and we will have more clarification on these provisions. Till then, please like, share and subscribe our YouTube channel. And also, if you have any queries or concerns, do post that in the comment box. We will be happy to help you out. Thank you.